Okay, welcome to It Pays to Save, Smart, Simple, Successful Strategies for Finding Financial Freedom. We are in the spreadsheet series, and today we are going to discuss the Mortgage Master Plan. This one has a lot going on, so we're going to jump right in. This one also takes a lot of space, so we're going to have to do a little shifting here. So what I'm going to do is I'm going to grab the paycheck calculator and the debt dashboard, go all the way down to March, cut, and go over to X, marks the spot, right click, and we're going to paste all that over there. It gives us some more space for our mortgage master plan. Believe it or not, the mortgage master plan takes up 30 rows. So we'll go from 17 to 47, and we're going to go all the way over to V. The whole time I'm pressing the left click and holding it down. I'm going to now let go, and I'm going to fill that. It's just a gray and a grid, and I'm going to start filling in the blanks. The left column is going to be the year. So it's going to be 2021, 2022, 2023, 2024, 2025, 2026, 2027, 2028, and 2029. Our goal is to pay the house down within 10 years. This top row is going to be the month: January, February, March, April, May, June, July, August, September, October, November, and December. Those will also be copied down here, as will the years. Now I'll explain all of this later, but just to fill in these blanks, we're going to go with the total, extra 1, extra 2, bonus 1, bonus 2, bonus 3, bonus 4. We're going to do tax return and a total. We're going to go to the last line, to the December column. We're going to just write original, monthly, extra, taxes, total, actual, savings, and prepaid. Probably went a little bit too far here, so I'm going to cut these off or just not fill them. And I'm going to take the border out, and I'm going to do the same for this area. And I'm going to skip the total line and do the same for this. No fill, no border. And to clean this up even a little more, I'm going to grab all of this and make it uniform by selecting it all, right-clicking, column width, and we'll make it 9. I'm going to center all the current content. And clean up the perimeter a little bit. Okay, we're going to do a little bit of math here. And first, I'm going to take the grayscale out And I also noticed that when I move this over, the spacing didn't work. So I'm going to clean this up a little bit later, maybe on the next step, and add some color, because I opened my personal spreadsheet and noticed this one looked a little bit boring with all the black and white. So we can add some color and dress it up a little bit in the next step. So we're going to work with the totals right now, and this total is going to equal, from the keyboard, January plus February plus March plus April plus May plus June plus July plus August plus September plus October plus November plus December, and enter. So now is a good time to grab all of these here in the middle, right click, format cell, currency. We'll do the $ with 2 decimal points. We're going to do the same down here, left click, hold it down to highlight, right click, format cells, currency, and the same for these. Right click, format cell, currency. There you go. This is also going to be a total of all of these columns. So January plus February plus March plus April plus May plus June plus July plus August plus September plus October plus November and December. Enter. And the same with this total. This is going to equal, from the keyboard, extra 1 plus extra 2 plus bonus plus bonus plus bonus plus bonus plus tax return. And we are going to keep this math for all of these rows. We're going to grab this corner and keep this math for all of these rows. And we're going to grab this corner and keep the math for all of these rows. I'm also going to take this time to center everything on the spreadsheet. So it's starting to take a little bit of shape, and just FYI, these are going to be your extra principal payments. So if you make a $500 payment in April of 2021, it'll end up here in the total. And these will all be the monthly extra principal payments. So this will equal each month and each year, add plus, 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 plus of all your principal payments. So if you make an extra principal payment in July of 2025, it'll end up coming down here and calculate towards the total. Now the extra column is calculated because if you get paid on a bi-weekly basis, that means you get paid every 2 weeks. There are going to be 2 months a year where you get an extra paycheck. So that's what these 2 columns are for. Your first extra paycheck of the year and your second extra paycheck of the year. And a good majority of that, for these purposes, should go to paying your principal down. So this cell will equal all of the extra paychecks you earn over the next 10 years. Or a good portion of those extra paychecks. So let's just check the math. That's adding up here. We're going to use the same theory when it comes to your tax returns. If you get a return every year, the goal here is to put your return into the principal, or a good portion of it. So we're just going to have this cell equal the tax returns over the next 10 years. Enter. Okay, well, I just noticed I don't have a column here for the bonuses, so I'm just going to grab these and scoot them down, and we'll come back and do the math here in a minute. I'm going to label this bonus, and if you're lucky enough to get bonuses every quarter, that's how this is laid out. So this cell will equal your 4 quarterly bonuses over the next 10 years. So I'm just going to quickly add all these in. And then we'll check the math. And I'm sure there's an easier way to do this. Enter. And we'll just put $1,000 bonus in here. See if the math translates. And it does. So we'll come back to this math in a minute, but I want to go ahead and fill in the amortization, the monthly payments into this area, and it's going to take a little bit of time. So I just want to get started on that. When you get a mortgage, you're going to get an amortization table. It'll look something like this. If you get a 30-year loan, you'll see that you're going to have 360 payments. And let's say you got that loan in January of 2021, you will not be paying that off until December of 2050. If you didn't receive an amortization table, you can call your bank and ask for one, or you can go to an online calculator and come up with the same numbers. But for this example, we're going to take a $125,000 mortgage for 30 years. The interest rate is 3.5%. And it's going to tell you your first payment is $561, and the principal of that payment, interest portion of that payment, and then your total interest, which will accumulate. And you'll see on a $125,000 loan over 30 years, you're paying $77,000 worth of interest. And that's what we're trying to cut back. We're not going to be able to cut back all of it because you're not going to be able to pay this off in year one, but we're going to try to make an attempt to turn a big chunk of that into savings and investments. So what I did here, I just highlighted every other year period so I didn't get confused. And you can grab that, right click on it, copy, bring it over to this cell, right click, paste special, because you want it to go horizontally rather than vertically. You might have to cut and paste and make your own spreadsheet, or you might have to type in the numbers manually. But all of your principal payments need to be entered into this area here. And this was just an easier way for me to do it. So we're going to grab these 9 years here all the way through December. We're going to right click, we're going to copy, go to our mortgage master plan, and we're going to paste them in. Now the fonts are a little bit big for our spreadsheet, so we're going to go up here and bring them down a little bit. And you can see we already did the math. So this cell does equal every monthly payment. And just to keep things consistent until we add a little color to everything, I'm going to take the shading out. I'm going to put the borders back in so it matches the rest of our spreadsheet. So now what you're going to want to do is go back to your amortization table and look at where your balance is going to be after you make your 9 or 10 years of payments. I think in our spreadsheet we're at 9 years. So we're going to count 1, 2, 3, 4, 5, 6, 7, 8, and 9. We're going to go to this number right here, which is your last payment in 2029. We're going to copy it, bring it over to our master mortgage plan, and we're going to paste it in this cell right here. Drop the font down so we can see it. And I'm also going to make the font a little dimmer because we don't really want this number to be a big part of our attraction. It's just kind of a hidden number that needs to be there for the calculation. And that calculation is your total mortgage, which is your original mortgage. So this cell is going to equal your balance after 9 years of payments plus all of the payments over those 9 years. And there's your $125,000 original mortgage. So that brings us down to the total. This total will equal your original mortgage minus your extra monthly payments, minus your extra paychecks, minus your tax returns, and minus your bonuses. Font's a little big, so we'll drop it to 9. Now the actual cell is going to be what your bank statement says. And you'll change this cell from time to time after you make extra payments. And it may read something like 129.94 and 50 cents. I'm going to make all of these smaller. Your savings is going to equal the total minus the actual. So by prepaying, not only are you bringing the balance down, but this is just a number that indicates how much you're saving in interest. So let's check some of the math. I'm going to take all of this out. I'm going to put it right back in. Of course, this would be 125,000. But we're not going to really deal with this at this point. But let's just say you're able to contribute an extra $150 a month for 2 years. And your extra paycheck for 2 years. And you got a $1,500 bonus for 2 years. You can see all this math happening, and you got a $2,500 tax return for a couple years. Now, over those 2 years, you would be making payments. So every time you make a payment, after your payment post, you should drop these down to 0. So I'm just going to delete those for now. And you can see by making extra payments and throwing everything you have into this principal, your balance is already down to under $100,000. And you'll see if you keep that up over 9 years, you're down to a $2,000 mortgage. And that's without making any extra principal payment. You'll see how it balances out. By making extra principal payments, you're down to a $40,000 mortgage. I'm just going to highlight this cell because this is the most important one. You're down to a $40,000 mortgage in 5 years. Add another year of extra payments and another year of throwing everything you have into your mortgage. You successfully cut $100,000 off of your mortgage in just 6 years. And you can see how it's possible to easily do that within 9 years within this spreadsheet. Okay, have to wipe all that out to make sure calculations are good. We're going to save it. And I'm going to just take out this last cell here, and I'm going to clean this up a little bit here. And that's the mortgage master plan. I appreciate you sticking with me. And on the next spreadsheet series, we're going to clean all this up and make everything look a little nicer. Okay, on to the next one. Alrighty, coming up next, the true cost of debt, step number 21. Please remember to like and subscribe to this channel and visit itpaystosave.com where you can find the workbooks and ebooks, the customizable spreadsheets like the one we just completed, newly released and updated content, exclusive content, limited time offers, and even some freebies. Again, that's itpaystosave.com where you can find everything you need for your financial freedom in one place.